It is the worst-kept secret on Wall Street. Investors want tax reform. Markets so far have done their best to shrug off the drama in D.C. that's slowing down the pro-growth agenda. The Dow Industrials this past week even making new highs. But how dependent is this market on tax reform getting done this year? Jim Grant is with me today talking about all of the above. What do you think? Do the markets need to see a tax reform package this year in order to continue this sort of elevation that we've seen?
You know, my colleague at Grant's, the great Evan Lorenz, was saying the other day, we were talking about what I could say about this on this great show, and Evan said, who is talking about the border adjustment tax anymore? No fourth quarter conference call was complete in America without furious back and forth questions and answers about the proposed border adjustment tax.
Looks like it's dead in the water. The president doesn't want it.
Right.
Paul Ryan's holding on to it.
Right, but it's so that is my answer to the question of whether fiscal policy is the thing that counts most. I think it's something we talk about a lot. I'm not sure about how important it is for the stock market. I think the stock market is perhaps running on expectations. I don't know what's running on. It's running.
Well, what about profits, Jim? I mean, earnings in the first quarter were up 15%.
To be sure, earnings are up, interest rates are down.
So is that the fuel for the stock market right now?
Yeah, I think it is. I mean, I think to some degree we can't know the expectation of better growth and of lower corporate tax rates is right there in the mind of the market. I can't tell you how important it is, but if it were to go away, it should certainly have some bearing on the future reckoning.
And you were expecting some disruption just from the Federal Reserve actions. I mean, as they start winding down their balance sheet, we're going to see disruption.
I think sometimes we overestimate the extent to which public policy drives events, and we underestimate the extent to which events set the agenda for public policy. You know, Janet Yellen would have us believe the Fed controls outcomes, I would say. And I've lived to see many episodes in the history of the Federal Reserve in which events were driving the Fed. And I think that the future will hold more of those. I think that Janet Yellen is not the arbiter of future outcomes. She is going to be the person who is driven by events. She's going to take her cue from events.
What about her future event? I mean, do you think she's going to get reappointed?
No, I think that what Trump wants is a low interest rate compliant, credit creating person. He wants an anodyne presence at the Fed. He wants Gary Cohn, who is a very, very successful Wall Street man, of course, president of Goldman Sachs. But what Trump wants is what Janet Yellen will deliver in the shape of low rates, a very cautious and measured retreat from low rates, and if necessary, a most aggressive return to radical monetary measures.
So it doesn't sound like you're buying this whole interest rate increasing cycle that we're about to enter, we believe.
I think that they will attempt it, and I think they will retreat from it, and I think that in the retreat, the world will reconsider the nature of our monetary affairs and the nature of money itself.
So I see that you're worried about all of the above. You're worried about the implications of the winding down of the balance sheet.
Yes.
You're worried about valuation.
I'm going to sound like Jim Grant, which is, I'm afraid, somewhat proverbial by this time. I don't mean to be repetitive, but the events are repetitive, Maria. Our institutions are repetitive. I say that there is more risk than reward in this market. I say that stocks at current levels are worrisomely high. I would say the interest rates are absurdly low. I would say that we are unreasonably complacent with respect to the capacities and the judgment of the Federal Reserve System and of central banks generally. And I say that now is a great time not to be caught up in the crowd, which has to invest as if by compulsion. Never before have we had so many trillions of dollars invested without regard at any degree to valuation and price. We calculated like $21 trillion worth, I think we counted at Grants, with central bank buying, index buying, ETF buying, that is done without a single check on the nature of the value that is being purchased.